Welcome to China Perspectives, a podcast on economic and credit developments in China, featuring experts from within and outside of Fitch Ratings. My name is Yin Wang, Head of North Asia Property, Industrials, Consumer, and Utilities at Fitch Ratings. Today, I'm pleased to introduce my colleague, Shuncheng Zhang, Associate Director at Fitch Ratings in Shanghai. Shuncheng joined Fitch in 2014, and he was a member of Fitch's China Research Initiatives team until the end of 2023. His research focus was on the Chinese property market. He was the lead author of Fitch's flagship China Property Monitor publication. In 2016, Shuncheng published a special report to forecast China's housing demand through 2030. And earlier this year, Shuncheng updated his market forecast and extended the forecast horizon to 2040. In today's podcast, Shuncheng will share key conclusions from his latest report. Shuncheng, thank you very much for taking the time to join the podcast. First of all, let's just cut to the chase. I think the most important view from your latest report is on the forecast of China's annual average housing demand from 2024 to 2040. So what would it be like?
We expect China's annual housing demand to reach around 800 million square meter on average. The demand will mostly come from existing urban families' upgrade demand and rigid demand, along with new urban residents relocating from rural areas and settlement-related housing needs are driven by old property demolition. We think 600 million square meter of our projected demand would be met by new private homes, while public rental housing and vacant properties could fulfill the remaining demand.
Thank you, Shuncheng. I think I heard you mentioned 4 types of demand. Can you briefly explain what they are?
Sure. So the first 2 types of demand will come from existing urban families, including rigid demand driven by newly formed families and upgrade demand for larger, higher quality homes. The third one is related to resettlement housing needs, as some urban families' old properties are dilapidated and therefore will have to be demolished. And lastly, China's ongoing urbanization will continue to support housing demand from new urban residents relocating from rural areas.
Thanks, Shuncheng. So you mentioned 2 numbers, 800 million square meters and 600 million square meters. And my understanding is 800 million square meters refers to the total gross demand from those 4 types. And 600 million is demand to be fulfilled by private homes to be built. So would it be fair to say that this 600 million square meters per year number is on an apple-to-apple comparison with around 1.1 billion square meters of new private homes sold in the last decade? And that would imply a more than 40% decline.
Yes, our projection for new private home supply indicates that new commodity housing sales will likely fall significantly from historical levels in the long term. However, we acknowledge that the decline might not be as deep as anticipated due to some potential upside risks. For example, some local SOEs may acquire unsold commodity properties from developers, which is encouraged by government policies, and they will convert them into public housing.
Yeah, I do appreciate that not all public housing supply needs to be newly built by the government. It can partly be fulfilled by absorbing some of the private homes inventory. But I think that the extent of such inventory destocking achieved by public housing conversion is not likely to be very large because local government finances are pretty tight. And also the places where there's excessively high private home inventory pressure probably don't really need too many public housing units. So there's, this sort of supply and demand dislocation issue here. So how would you connect your 600 million square meters forecast with the current state of the private market? Does that mean Fitch expects no recovery in the private housing market such that the current downturn will further deepen for many years until the annual sales volume of new private homes reaches 600 million square meters?
The 600 million square meter forecast for new private home supply is about 37% lower than the 950 million square meter of new home sales last year. And it also falls well short of our latest forecast of 850 to 900 million square meter for 2024. Also, around 400 million square meter of new private homes were sold in the first half of this year, down over 20% year-on-year from a high base. So there will likely be a continued sector consolidation in the medium term. That said, this does not necessarily mean that new home sales would plummet to the 600 million square meter to reach a stabilization. Instead, we are likely to see fluctuations during the market correction phase, similar to what those developed countries have experienced. Also, the Chinese government will continue to roll out supportive policies to ensure the decline in housing market as smooth as possible. Besides, if China's economic transition is successful, leading to stronger GDP growth and more favorable demographic trends, then anticipate the level of future housing demand could stay above our current expectation.
Okay, now we have the conclusions. Can you walk us through how your forecast is modeled and derived?
Sure. To build our projection for each type of housing demand, we make assumptions for a number of key demographic and economic factors, such as population growth, urbanization rate, average urban family size and living space, and the pace of old property demolition. I will quickly walk you through how we estimate existing urban families' upgrade and rigid demand to demonstrate our forecasting process, as they will likely represent the majority of future housing demand. First of all, we estimate the total living space required by all urban households in 2040, using assumptions about average living space per household and the total number of families at that time. Here, we exclude new rural to urban residents over the forecast period, as their demand is projected separately under urbanization-driven demand. And next, we deduct the gross floor area of existing residential properties that will last by 2040 to determine the upgrade and rigid demand from existing urban families over the next 17 years. And to ensure our assumptions are reasonable, we utilize forecasts from institutions that are widely recognized for their expertise in related fields when such data are publicly available. For instance, we use United Nations projection for China's total population and urbanization rate to estimate the number of urban residents by 2040. And when such data are not available, we choose to look at comparable developed countries' historical trends, which can serve as reliable leading indicator for China to derive some of our assumptions. For example, we consider Japan a good reference for future shifts in average urban family size and average living space, given similarities between the two countries in certain periods. Meanwhile, we also factor in the impact of government policies when making some of our assumptions. For example, we expect a higher percentage share of new urban migrants that will relocate from rural areas and then the historical level, and due to the very minimal barriers to local household registrations in most cities, and the Ministry of Natural Resources restrictions on urban sprawling. It is worth noting that we used our model to calculate the housing demand for 2011 to 2020 as a backtesting, and the outcome largely matches the actual demand that is derived from new private homes sold and newly occupied public housing, which supports the reliability of our model. So this is essentially how our forecast model works.
Thank you, Shuncheng. So in summary, what are the main factors affecting China's housing demand change that leads to this big decline in your annual housing demand forecast up until 2040 from the current level?
Our projected decline is mainly caused by a decrease of at least 30% in both urbanization-driven and demolition-driven demand from the historical level. In comparison, existing urban families' aggregated demand is likely to drop only slightly. Key driving factors include lower population growth, a slower pace of urbanization, and a smaller scale of urban renewal projects. First, our estimate, which is based on United Nations projections, suggests that China's total population will fall slightly by 2040 from the current level. This translates into small annual declines over the next 70 years, mainly due to a consistent drop in new birth rates. This is a significant change from the mild annual growth observed from 2011 to 2020, which poses a major constraint on both rigid and upgrade housing demand. We also expect the pace of urbanization to slow down by more than 50% given an aging population and economic transition, even though China's current urbanization rate by population still lags well behind that of major developed countries. As a result, the average annual increase in rural to urban migrants is expected to reach less than half of the level in 2011 to 2020. In addition, we foresee a reduced need for urban renewal projects, as the majority of existing homes were built after the 1990s and are of significantly better quality with a longer expected lifespan. And many existing buildings have high plot rates, making demolition economically infeasible. And the Housing Ministry restricts the demolition of buildings that are not dilapidated. Consequently, we assume the percentage share of existing buildings to be demolished annually will be less than 40% of the historical level, leading to a notable decline in resettlement needs among urban residents.
To summarize what you just said, 3 out of the 4 types of housing demand is going to trend down in the coming decade. First of all, because fewer babies are born, marriage rate is declining, so the demand driven by new families being established is going to be less. And secondly, urbanization rate will continue to rise, but the room for upside is getting less, and therefore the pace of urbanization rate increase will be slower. And thirdly, the old buildings are still being torn down, so people need to move into newer and better homes, but there will be fewer old buildings demolished. And the lower demand from these 3 types of demand sources cannot be fully offset by what you mentioned as relatively resilient demand from people who want to upgrade into bigger and better homes. Okay, so this means before we consider supply, the gross housing demand in China is already going to be lower on an annual basis in your forecasted horizon than in the past decade. Is that correct?
Yes, exactly.
Okay, so now let's talk about supply. How did you forecast public housing supply and the secondary home supply over your forecasted horizon?
We expect a significant increase in the supply of public rental housing compared with the level seen from 2011 to 2020. Our expectation is largely based on the Housing Ministry's guidance that public rental housing should comprise at least 30% of local home supply in 14 major cities where home prices are relatively high or there's a consistent inflow of young people. And we also consider these 40 cities' historical contribution to national new home sales and public housing supply in order to decide the percentage share of public housing in total home supply. Our supply forecast includes the release of vacant secondary properties, but we do not take into account those occupied. This is because we estimate incremental housing demand, which will ultimately need to be met by new housing or vacant secondary properties.
My last question for you is, how does Fitch's forecast compare with other institutions' views and forecasts?
Our demand forecast is lower than most other institutions' forecasts, which usually stay above 900 million square meters per year. The discrepancy arises because we factor in slower urbanization or a smaller scale of old property demolition, while others adopt more optimistic assumptions. In addition, some institutions' demand forecasts are not on an incremental basis. For example, we consider the net increase in upgraders' living space, but some institutions estimate total size of upgraders' new properties.
Thank you very much, Shuncheng, for sharing your views from this very interesting report. The report is available to Fitch Solutions subscribers for download from the website or upon requests sent to us. You have been listening to Fitch Ratings China Perspectives podcast. To learn more about our ratings and research on China, visit us at fitchratings.com. Please subscribe to iTunes, Spotify, or wherever you get your podcast. Take care until next time.